Hello everyone, and welcome to your Glassnode video report for week 4, 2024. So we've seen Bitcoin correct fairly substantially, although on a relative basis, it's still only down about 20% from that $49,000 high. We got down into the 38,000s this week, and this really has been the classic sell the news event. Now, very often in markets, markets go up and down, right? Quite often you need to have, in a macro uptrend, we need to have corrections. These are very healthy. It helps reset people's cost bases, and it allows coins to move around from people who bought the local top and then panic sell at the bottom, and you start getting this kind of changing of the guard, changing of the holding pattern over the course of the cycle. So what we're going to be looking at today is a new dashboard we've actually rolled out called percent supply in profit. And really what this is looking at is the incentive for people to start spending. So we've obviously had the market dynamics of GBTC. We're seeing a lot of coins coming out of GBTC and going into the other ETFs, but we're still seeing some degree of sell pressure coming from existing holders. So what we're going to look at today is that incentive. Why are people actually taking profits? And, being up 180% off the FTX lows is usually a good metric, but how do we really apply some rigor and some mathematical sense to what is an oversold or an overbought level? So what we're going to be looking at today is this percent supply in profit concept. And we're looking at it from the perspective of long and short-term holders. Now, this is a great cohort because we're really looking at long-term holders, as it sounds, are the existing folks. They've been in this space for a long time. They've held their coins for at least 5 months. They are statistically the least likely to spend. Now, we also have the short-term holders, which is kind of like the hot ball of money that follows price around, coins that move within the last 5 months, and they are statistically the most likely to react to market volatility. So what we're going to do is use this concept of supply in profit. How much of it in a coin volume sense? What is it as a proportion of their total holdings? And do some simple statistical bands to just look for what does oversold, undersold, what are these levels that actually make sense for the market to respond and react? And what I think is a really important thing, keep this in your back pocket as we go into this session, the amount of supply that's in profit or the unrealized profit. Think about this as the incentive for investors to make a decision. How much profit are they in? What proportion of their coins are in profit or loss in downtrends? But this is the incentive to spend. There is another side to the equation, which is metrics like realized profit, realized loss, SOPA. They all sit within the spent domain. And those spent coins are really, did they actually take action? So there's two components. We're looking today at the unrealized component, the incentive to spend. And there is another component which is all about the spending activity. Did they actually take that action and spend their coins? So that's the concept that we're going to be going through today. And as I mentioned, this is a brand new dashboard that's just been rolled out on Glassnode Studio. You'll find it under Bitcoin in the profit and loss section called percent supply in profit. So before we get started, please do give us a rate, a share, and a subscribe. It really does help this channel get to more people and really gear up for this 2024 season as more people come on board and start looking at on-chain data and looking for how it can really tell a story that you just can't quite get from just looking at price and traditional metrics alone. So with that said, let's get stuck into it and start the analysis. Okay, so here we are in our percent supply in profit and loss. And as I mentioned, we're going to be looking at things from the perspective of long and short-term holders, as well as the aggregate market. So there's a whole suite of tools here, and we're going to start to build up a bit of a story. Again, we're going for that incentive to sell. What is the incentive? And more importantly, actually, when markets go through corrections or rallies, think about a large price change. We move from one range to another. These metrics are really powerful for looking at how has the overall cost basis, positioning of the market changed. Are more people in profit? Did we see a large amount of coins get reaccumulated in that zone? And now that price is above, they've gone from in loss to in profit, which improves the overall profitability of the system. These are the kind of questions we're going to be answering. Now, as usual, we're looking at long-term holders in blue and short-term holders in red. And we're going to really build this up from top to bottom, starting with the overall market, and then diving into the short and long-term holders individually. So what we're looking at here is the long-term holder supply in blue and short-term holder in red. We've covered this many times, so I won't stick on this for too long. I think just to really set the scene, long-term holder supply is coming off its November or December all-time high, about just under 15 million coins. I think it was up to about 80% of the circulating supply. It has pulled back meaningfully. We're down to about 14.83 million BTC. Now, a lot of those coins are coming out of GBTC. So those coins have been dormant for a very long time. Those coins are moving from one ETF to another, essentially. But of course, that's not the whole story. There is also existing holders who are taking profits, and we're going to touch on that in just a second. So just to put things in a macro context, we are only just lifting off short-term holder supply, is only just lifting off the bottom. You can see that during full-scale raging bull markets, these really start to diverge and climb in the short-term holder sense because old hands transfer their coins to new hands. So this is an influx of new demand, but new people, in many cases, buying the top. We are some distance away from that. Now, of course, if the market really does fail and continue to trade lower, that's really telling you that you only needed this much supply to really put some damage on the market. So it tells you something about the influx of demand. Is it actually strong enough to keep the price moving? Now, we can also break that down into the amount of coins in profit or loss held by these different groups. The dark colors here in the blue and the red is for coins in profit, and for coins in loss, we have these darker shades, and these lighter shades, are in profit. So in loss, which you'll see expands during the bear markets, is these darker shades of these colors. Now, just to put a bit of perspective, and again, we'll start very macro and then zoom in. Note that bear markets, pretty much everyone is having a tough time. Long-term holders are experiencing significant losses, and they carry a lot of it through that bear. This is kind of what makes the hardened hodler in many ways. And we see that short-term holders, that's a lot more volatile because it's that hot ball of money following the price around. But as we come into, let's say, 2016, this is kind of the recovery phase. These two loss bands start to close and close and close. And then, of course, when we get to all-time high, by definition, everybody is in profit. So you kind of get this tapering in, but note that it takes a long time. It took pretty much the entirety of 2016 to close this gap. 2019, we had a very similar, we tried to close that gap, but the market wasn't quite ready. 2019 went up a little bit too fast, and we actually then had to go into a second kind of miniature bear market. But again, as we came into 2020, following the COVID sell-off, we had this squeezing effect where all those coins in loss closed up. So in our current environment, you can see the depth and just how angry the 2022 bear market was, but also note that long-term holder supply is, and this is on a percent basis, by the way, we're looking at this in terms of relative terms, long-term holder supply is substantially higher than where it's been in all of the prior peaks. So there is a lot more hodling going on in the space. So the supply is much, much tighter than it's been in previous cycles. But as you can see, we're trying to close that gap, and we haven't quite got there yet. So the question is it like 2019? Is it a bit more like 2016? These are some of the frameworks we're going to use moving forward. Now, this is a nice oscillator to just really set the scene and try and understand the change in those environments. So what we're looking at here is how much does the percent supply in profit, so only coins held in profit over a 30-day period, how much did it change on a relative basis? So in other words, if we get a reading up here of about 5%, 6%, 10%, it means that long-term holders in blue, short-term holders in red, or the overall market in yellow, we're seeing that percentage, right? The amount of their supply that's gone into profit has increased when it's positive by 10% of their supply, right? 10% of their supply has gone from in loss to in profit. Now, just note that we tend to get these big peaks in supply and profit during these big rallies. So when you get large peaks in these metrics, it's telling you that lots of coins in the previous price range have just gone from in loss to in profit. Conversely, when we get these big negative events, look at August here in 2023. We had a sell-off from about 20, I think it was 29K down to 26, but we were coming off a $32,000 level. A very significant chunk of short-term holders went from in profit to in loss. So we saw a large change. Now, this can change investor sentiment. Here's our May 2021 sell-off. This is really what broke the back of the bull. Too many people went from having a great time in the bull to having a really, really awful time almost overnight. So this is really telling us that the short-term holders, it kind of broke that bull market sentiment. We had a couple of attempts to keep pushing higher, but it just wasn't enough, and the bear market obviously then set in. So you can use a metric like this, and if we look at it from our current environment, we've seen that long-term holders are essentially flat in terms of their overall supply. We'll touch on that more later. But short-term holders who really bought in the recent local highs have seen a meaningful downtick. They've gone from in profit to in loss. This tells us there's quite a few people who sold up to this level New short-term holders have a cost basis up here in the 42, 45, maybe 49,000, and they are now experiencing a meaningful drawdown, 20 odd percent. So it has the potential to break that sentiment in the short term or even the longer term. But it also tells us that there's lots of trapped traders up there. And again, you can use this to really gauge the magnitude. It's just one framework for how we can think about how coins and supply and cost basis are moving. Now I'll leave this one. This is just looking at total supply and profit. There's two real key oscillators in on-chain analysis that everybody who's studying this should really become very familiar with. First one is MVRV and the other one is SOPR. These are actually systemetrics. They tell a very similar story. And it is, for MVRV, the unrealized profit or loss in the system. SOPR is the realized profit or loss getting expelled from the system. So it's the spending versus the unspent component. So for MVRV, what I've set up here is just some very, very simple long-term average in the middle, and then plus or minus one standard deviation bands. Now, of course, for more detailed analysis, we can look at all sorts of things, Z-scores, and we can put different statistical bands on there for different levels. But I think that this is just a nice instructive starting point, that this middle zone, this mean, we've actually broken above in October, and we've actually come back down to retest that level. Now, if we look at 2016, again, remember that supply chart where it was kind of a very similar mechanic to what we see at the moment. We oscillated for about 12 months around this mean level in 2016. 2019, we broke above and we were kind of oscillating in and around it. This was kind of where the market spends most of its time. This is where the market is digesting. We've had the bear market. We've then had a significant rally off the bottom. But of course, things don't go up and down in straight lines. The market has to digest these moves. Now, we can also see that during bull market peaks, we really break above this +1 standard deviation level, and that tells you we're in the excited, euphoric bull phase. We tend to spend a lot more time below that level, oscillating around this kind of mean zone. That's more in this, it's certainly an uptrend, right? We're significantly off the bottom, and the market sentiment has really shifted towards the positive, but we still have some time to digest this process. So that's one way to think about it. And obviously analysts can set whatever standard deviations and different bands, just help frame up where we are in the cycle. Now, whilst MVRV is capturing the unrealized profit or loss, think about that in terms of like the dollar value or the percent that people are up. If MVRV is 2, it means that people are up 100%, right? Their cost basis is at 1, plus another 1 gives you 100% in profit on average. We can also look at it in terms of the percent of global supply that is in profit or loss. Now, note that here in 2016, we broke up again above this 1 standard deviation level. A lot of coins are now in profit. The incentive to sell and just take a little bit off the table for many investors has been hit. 2019, we hit this level as well, and then we had to have a meaningful correction, right? This one here lasted for almost an entire year. We had a couple of attempts where we get up to this level. It's a very, very typical point for people to say, I'm up significantly and it's time to just de-risk. And then you add in there the ETF narrative, which is going to create that influx of demand. And again, a lot of the smart money are going to be taking profits knowing that uptrends continue, right? They'll have their metrics and their indicators and their tools to try and identify, is this a correction or is this a bear market, right? Trying to look at the distinction between those two is obviously part of being a market analyst. There is no perfect answer, but really we're looking at the incentive certainly got hit where a level is, yeah, it's probably likely that we'll get some kind of a correction. Now, one more thing. Note the decline in percent supply and profit. This is actually relatively steep. So that's telling you something about how many traders are now trapped above our $39,000 price level. People who bought higher, the change from here to here is actually telling you the proportion of supply. So when you get big rallies out of an existing price range, it tells you how much supply was accumulated, held, transferred to new hands at a different cost basis, which, let me just scroll back up for a second, is exactly what this metric is telling you. Over a 30-day period, how much supply has gone into profit or into loss, broken down by different cohorts. Okay, so transitioning across to the short-term holders, which for the most part here, whilst long-term holders are contributing meaningfully to the sell-side pressure, short-term holders are important to track because they are the most likely to spend. They're the most reactive, and they're the ones that kind of create the violent reactions. Long-term holders typically are present around extremes. new all-time highs, an ETF launching, cycle highs, cycle lows, they typically exert their sell-side pressure in that euphoric bull phase and their accumulation pressure down near the lows. So what this metric is looking at is total short-term holder supply. That's what we looked at in the first chart. But then what we've also got is this red zone down the bottom here is the percent of their supply in profit, right? How much of their total supply is in loss. Now, I use this chart particularly to look for what I call top-heavy markets. Points in time when a large amount of people have a lot of coins that are now underwater that they weren't underwater just a couple of days or weeks ago. So what do I mean by that? Well, you can see that during the uptrend, unfortunately the price chart is actually hidden back here, but during the 2021 price chart, we always get these corrections where short-term holder supply in loss goes up, and then it comes back down, then it goes up, and it comes back down, but then sometimes almost all short-term holders are in loss. This big sell-off here in May 2021, the one that broke the back of the bull in many ways, this very sharp uptick. By the way, here's 2019, same thing. Almost all short-term holders go from having a great time to having a not so great time. This tells you we now have a top-heavy market. Almost all of this short-term holder supply was trapped at this higher level. The November all-time high, another great example. All of these people who bought the local high suddenly go from having a great time in October to having a horrible time in November and December. Now, we did actually have a bit of a scare here in August. We saw a significant uptick. So in many ways, this would tell us we have a very top-heavy market, and we did raise that back when this actually happened. But note that the market traded sideways and pushed through it. This is a great example of we can set our risk triggers and say we may well have a top-heavy market, but it didn't eventuate. And this is a great example of keeping your biases fluid. In the event, the assumption here would have been we have a top-heavy market, we may be in for a deeper correction. When it didn't manifest, and there was lots of realized losses here, SOPA was ticking lower at significant levels. We had lots of realized loss going on, but the market chewed through it. And as a result, we actually had a rally from 26K all the way up to, well, 49 if you measure it to the ETF. So just putting things into perspective, you can see about 50% of short-term holders are in loss. It looks at the moment a lot more like your classic uptrend uptick in losses, right? You've got a couple of people who bought up here. It's significant. It's still 1.4 million coins or thereabouts. But at the same time, we haven't yet got this top heaviness. Now, using that same logic, if we do continue to correct, it's telling you that we may, in fact, right, the same way that this full, right, top heavy supply actually broke to the upside, it just gives us a trigger point to say, well, if only this many coins in loss is going to trigger an even deeper correction, maybe the market doesn't have as much inflowing demand, right? So we can start to set up these frameworks to think about things moving forward. Using a very, very similar framework, I won't dwell on this because the logic is the same as our previous oscillator. We can again see that short-term holders, everyone was having a great time. Their supply and profit was above 90%, well above the +1 standard deviation level. And again, these are points when profits typically get taken. The incentive is high enough by this cohort to actually take some off the table. The big difference here, the previous one where we look at all of the supply, it's a lot more macro, right? It tends to trade in these kind of bigger, longer term cycles. Short-term holders tend to give us a bit more of a, let's call it a trading indicator, more information about what's happening on a more local basis. So rather than kind of spotting bottoms and spotting tops, you can see that short-term holder supply and profit can tell us a lot about the corrections, the local events, right? Before the correction actually kicks off. It tells us about these local peaks all the way through the market, and likewise the local dips as we go through bear cycles. We also have our short-term holder MVRV. I won't touch on this too much because I think we've covered it. Very much the same through 2016, oscillating around that long-term mean, but again, a lot more sensitive. This metric is going to bounce around a lot more, but for those who are more active in the market, looking for those more frequent trades, something like your short-term holder MVRV is going to be a much better tool to really understand what's going on with those micro oscillations, local peaks, local lows. And again, MVRV tends to oscillate and reach these local maxima and minima all the way through the bull. Now, the last thing I'll just note here, you can see changes in character. Bottoms look very different to this kind of mid-cycle early bull market, which looks very different to the high oscillations of our euphoric bull. So we can actually start to spot these different market character shifts as it moves between these different levels. It's kind of like a resonant frequency that the Bitcoin market goes through, and short-term holders, being that ball of money that follows price, are a really, really great reference point for that. Now we do have an additional metric. Now we're moving into the long-term holder space. Similar to that top-heavy chart we were looking at for short-term holders, this is the equivalent. So we've got all long-term holder supply in blue, and then we have a subset of that which is going to be in loss. Note that their losses tend to be at the maximum during the cycle lows. So as I said, long-term holders are much, much more useful. A lot of the metrics we use, they typically come into the fore and they're much more useful towards cycle extremes. Short-term holders really dominate a lot of the daily flows between those local maxima and minima. And you can see that we've really had that massive low, right, in terms of long-term holder supply and loss. These are people who are willing to hold on, no matter what the volatility, no matter what the price. We see this point where long-term holders, they can withstand that financial pain. They can carry that ball all the way to the end zone. And we're now getting to the point where they're almost entirely back into profit. Not quite, but almost back into full profit. And just to really put a fine-tooth point on that, here's our long-term holder percent supply and profit. Even more so than the global supply, it is this macro long-term oscillator. So obviously much better if you're looking at that long-term momentum, but of course it's a much slower metric to respond. So you can look for periods where it reverses and changes shape, but as we go through the bull market, almost all long-term holders are going to be in profit because most of their coins were accumulated in the previous bear. And in many ways, this is the distribution phase. When long-term supply is fully in profit, we're seeing that distribution pressure transferring coins from long to short-term holders. You get that influx of new demand. They probably don't understand Bitcoin quite as well as the old money, and they become the most sensitive at the top, who actually then create the bear market that follows. So again, a bit more of a macro view. We haven't quite got up to that level, very similar to 2019, very similar to August 2020, and indeed very similar to July 2016. So at a very, very similar level. And again, all these things tend to line up with previous cycles, as interesting as that is. I won't touch on long-term holder MVRV. In fact, what I'll do is I'll just pause there because I think that's probably enough information for now. I think the big picture takeaway, particularly from this dashboard, is using these tools of unrealized profit and loss. Think about it in terms of the investor sentiment. What is their positioning? How has their positioning changed? How can that be used to identify a big cluster of people who just bought the local top? Markets go up and down all the time, and really it's about understanding what the cost bases are doing. What are the investors' holdings doing? How is their transition from in profit to in loss and vice versa going to infect their sentiment? And as a result, that creates spending. So the next chapter of this is looking at all of these concepts, but from the spent domain. Are they actually taking losses? Are they actually realizing those losses? Are they buying those tops? Who is selling at what profit multiple? That's where metrics like SOPA, realized profit, realized loss, profit loss ratios, these are the kind of things that help us gauge that much faster, more actionable, and really that kind of the changing factor. This is what's essentially staying the same, right? The only thing that's really changing here is price, moving around their cost basis. It's the unrealized component. The realized component is what actually changed, what coins actually moved in and out of exchanges, changing hands, locking in profits, locking in losses. So thanks for tuning in for that session, folks. Hopefully you found it useful. A little bit more fundamentals, right? Really understanding market structure and how it's playing out within the Bitcoin data. We really do have such an amazing set of data to look at in the on-chain space. We can see people's cost bases moving. We can see when people are in profit, and we can see when those positions change. So keeping an eye out for top-heavy markets in a local and a global sense. Looking for periods where we get divergences, lots of realized losses, but price just seems to grind through it. All of these things tell us about the supply and demand balance. And at the end of the day, to study markets, that is more or less what we're trying to do. So anyway, hopefully you found that useful. As always, let me know if you have any questions at all in the comment section below, and I will see you in the next one. Cheers.